Bitcoin started as something very practical and ended up becoming the focus of investing and speculation. And when that happens, all economic causes are out the window. You get into socioeconomic causality, where people are trading because they're in a herd and they're feeding off of each other and they're reinforcing each other's psychology. Bitcoin was a phenomenon of speculation that tracked primary wave 5, the circle 4 to circle 5 top, perfectly throughout the period. And guess when the bull market ended? January 2022, the exact month when the Dow Jones and S&P and New York Composite topped out. So we think it's over, as you can see, or at least I do.
But if that's correct, then the wave 3 of the downtrend, do you think that would be taking us below, well, obviously below the lows of last year, but is the wave 3 of the downtrend likely to take us below, let's say, 6,000 or 10,000? What is wrong with this particular wave count? Because this is an alternative potential scenario. I want to know whether you think it's likely, or how likely is it? This would be that in the blue count, that wave 5 is not done yet, and that we're due for one wave 5 up for all-time highs before we see a collapse. But how likely do you?
I think there are reasons not to do that.
All right, guys, hello and welcome. We're joined here in this particular video with our special guest, Bob Prechter, who, as you know, is one of the most well-known analysts in the theory of socioeconomics, which I'll talk about later in this video, and also about Elliott wave theory. He's one of the greatest experts on Elliott wave theory, the theory that market moves occur in 5 waves, as well as 3-wave corrections. And in this video, we're going to talk about Bitcoin. Where is Bitcoin likely heading? And what does Bob Prechter think about the crypto situation right now? All right, guys, join us. Okay, guys, welcome back. Bob, thank you very much indeed for this particular video. Now, I know that your main specialty is in the stock market. We've done a stock market video already, but I'm curious to know your views about Bitcoin and where you think the situation is with the wave counts.
Well, the first thing you should know is that I think the Elliott Wave Theorist was the first newsletter, financial newsletter, or any publication to write up Bitcoin. My son, who just coincidentally happens to be named Elliott, he went to MIT and he got very interested in Bitcoin early on. And he contacted me and he said, have you looked at this? And when he showed it to me, I got very excited. I was really over the moon about the idea of a currency that was not run by a central bank or a government, a currency that once all the coins were minted, no more inflation could possibly occur. Only deflation was possible as people lost coins. I said, what a great way to save. Can you imagine people saving for their retirement in an accounting unit that wasn't losing value like the government-run currencies? I thought it was absolutely great. Well, he wrote it up and I published it. And at the time, Bitcoin was 6 cents. You had to chase people down to find it. You couldn't go to an exchange to find it. And we were, very optimistic about, the prospects for this. Now, I have to say, we had no clue where this thing was eventually going to go. But we did like it early. And of course, it went to 60 cents, and it went to $6, and it went to $60, and then $600, and $6,000, eventually topped out at $70,000. Bitcoin started at a penny. So 1 penny to 70,000 is a 7 million times multiple. People used to talk about anyway, the tulip mania in Holland in the 1600s as something amazing, and I think that achieved about a 60 times multiple. No, this broke every imaginable record. What happened was Bitcoin started as something very practical and ended up becoming the focus of investing and speculation. And when that happens, all economic causes are out the window. You get into socioeconomic causality, where people are trading because they're in a herd and they're feeding off of each other and they're reinforcing each other's psychology. So, it went up and up and up. I would like to show you, if you don't mind. So I want to show you why Bitcoin was timed as it was. Recently, in the September issue, I wanted people to understand how powerful waves of social mood are in creating things like manias. If you look at this chart, you'll see the Dow Jones Industrial Average on the top. And of course, we had that bear market period from 2000 to 2009. It was an ABC expanded flat in the Dow. And that is the bottom when Bitcoin came out at a penny.
Yeah.
Okay, so what was Bitcoin? Bitcoin was a phenomenon of speculation that tracked primary wave 5, the circle, wave from circle 4 to circle 5 top, perfectly throughout the period. This was a time when we had fifth wave social optimism. It created a lot of trends, but most importantly, trends in speculation. And of course, people bought stocks because that's what they always do. They bid up stocks. But at the same time, they began to discover this obscure thing called a Bitcoin. And then they got their, the bit in their mouths and started running with it. And we had herding going on.
Yeah.
And they ran Bitcoin up constantly, even when we thought it was priced at a crazy amount of money. And don't forget, part of the way up, after maybe 2/3 of the way up in this bull market, people began to realize that the blockchain that Bitcoin relied upon could not handle transactions worldwide. It was too slow. And when we heard that, we reverted to our primitive brains and said, well, how could a bull market continue when everybody's just proven that Bitcoin can't do what it was designed to do? But of course, that was incorrect. Outside causes mean absolutely nothing. So the bull market continued on. And guess when the bull market ended? January 2022, the exact month when the Dow Jones and S&P and New York Composite topped out. This was just a companion, a fellow traveler along the bull market brains of people who were herding together. So we think it's over, as you can see, or at least I do. Elliot agrees with me that it's over. And I think Bitcoin has actually entered a realm not unlike that of NFTs. We called NFTs a bull market in nothing. I mean, literally zeros and ones that anybody could take a snapshot of and have it on their wall if they wanted, but you were paying up for it. And Bitcoin has kind of entered that realm because it's so impractical. Now, if Bitcoin fixes the blockchain problem, great. Or if somebody else invents a coin that can handle worldwide commerce, I'm afraid Bitcoin wouldn't be worth very much, would it? If somebody else invented a Bitcoin, I mean, it could theoretically go to zero. So, we think it's in a bear market, and the bear market has a lot more to go for what it's worth.
Thanks, Bob. If I could go to my slide. And just to finish off this video, I just want to show you the two charts, which I essentially took your wave count and I applied it to the charts of Bitcoin. Not too different from you. So essentially, I used your chart and I just put on my chart on TradingView. So the 5 waves, which essentially completed in your view, the 5 of 5, the wave 5 of 5 has completed back in January 2022, correct? And we're starting the waves 1 and 2 of a larger degree downtrend. I have a question about this. So I do see your point. So your view with this wave count is that higher highs, in other words, all-time highs, is now unlikely. Not impossible, but less likely, based on what we're seeing here. But if that's correct, then the wave 3 of the downtrend, do you think that would be taking us below, well, obviously below the lows of last year, so below 15K, but is the wave 3 of the downtrend likely to take us below, let's say, 6,000 or 10,000? I'm assuming the answer is yes, but...
Yeah, I think the answer is yes. And when you plot bear markets, I mean, bull markets you should plot on log scale as you have here, but bear markets are best reviewed in arithmetic scale. Okay. So once you start the bear market, the waves tend to be much clearer in arithmetic scale. And you can see here, if you try to trace out, 1, 2, 3 or ABC on a semi-log scale, you're gonna see expect ridiculously low prices. I think they're possible just because of what we said before. Again, if somebody invents a better coin, then this thing just doesn't have a future. Right. But anyway, we're just following the waves as they unfold. I agree. We're not trying to make any, dramatic predictions.
That's right. That's right. I want to put this to you as well, because what is wrong with this particular wave count? Because this is an alternative potential scenario, possible, but I want to know whether you think it's likely or how likely is it? This would be that in the blue count, that wave 5 is not done yet, that the that the drop we had since 2021, 2022 was an ABC wave 4 correction, and that we're due for one wave 5 up for all-time highs before we see a collapse. Well, I guess the difference between this one and the other one would be that the wave 5 would just take a bit more time to complete before we see the major bear market. But how likely do you? Yeah, sir, go ahead.
Under the rules of the wave principle, I think it's fits. It's okay. You can label it that way if you want, but I think there are reasons not to do that.
Right.
For example, wave C is very long and slow within wave 4. Okay, wave C of 4 we're talking about.
Yes, that's right. Correct. Yeah, correct.
And if you'll notice, B went to a new high. So that means we're talking about an expanded flat. Well, in expanded flats, the C wave is the wave that's usually very sharp and quick and dramatic.
Right, exactly.
Zigzags, it's usually the A wave that's sharp and dramatic. So why are we having this lazy fourth wave, that the C wave within 4 that takes forever? I don't like that. And also, I don't like the fact that, look how close that wave 4 low came to overlapping wave 1.
Yes.
It's probably just missed by a hair, but that's one deep 4. Yeah. And so there are 2 reasons why that's not my count.
That's really interesting. Thank you so much for that, Bob, because I hadn't thought of that. But so in other words, you're saying that if the B wave was a bull trap like in this chart, if that was the case, you would have expected the C wave to be much more sharper, big drop, like a very sharp big drop, not like this slow, gradual C wave like in this chart.
I can give you 2 examples from history.
Yeah.
The collapse in 1962, that was almost a crash. That was a C wave of an expanded flat. The collapse of 2007 to 2009, C wave of an expanded flat.
Oh yeah, that's right. Good point. Yeah.
They are devastating and fast.
Yes.
And this C wave looks nothing like those.
Okay, so in other words, the first wave count that we looked at, the red wave count with the wave 5 top, that's much more likely. I have to tell you, I've come to agree with you on that point after speaking with you today. Of course, not good news for Bitcoin and crypto enthusiasts, unless some miracle occurs. We shall see. But thank you so much indeed. So, in other words, if that's correct, if the wave 5 of 5 of the large bull market has topped and peaked already in Bitcoin, I guess 2024 will be could potentially be a devastating year for Bitcoin.
I think stocks in Bitcoin are likely to continue to track each other as well, and so we have kind of the same outlook on both of them.
I totally agree with you. I mean, I don't agree with this view that Bitcoin and stock markets have decoupled. On the contrary, I think they're very much move in tandem, and I think, as you correctly said in this video, they move together because of the herding effect that occurs in sentiment and in groups of people. Both are very much risk assets and things that people herd towards in social mood. Am I saying that right? I don't know if I'm saying that right.
Yes. Now, there are markets that have their own herding dynamics. For example, commodities that don't go in the same direction as stocks do. But in this case, it was clearly, we mapped it out, and you can see it was clearly just a fifth wave manifestation, almost as if it was just stock that people were in love with.
Thank you very much indeed, Bob. And guys, make sure you do check out Bob Prechter's newsletter, which you can get a great discount if you go to this particular link. That's elliotwave.com/Alessio. Check it out in the description. Let me say again that I myself am an avid reader of Bob's newsletter, The Elliott Wave Theorist, which you can get a subscription to and also at a discount with the link you see here, elliotwave.com/Alessio. Go check it out. I'll put the link in the description. I believe you also get a discount on Bob's book as well. Highly recommend that. Check out his book and also the socioeconomic theory of finance. Thank you very much, Bob. Really appreciate it.
Alessio, I think you've been asking me more interesting questions than anyone has asked me for many, many years. So good for you.
Thanks very much.